Good afternoon. Welcome to the fourth and final webinar in the series discussing the exposure draft general presentation and disclosure, which is a consultation document arising from the IFRS work on primary financial statements project published in December last year. Just as a reminder, original comment period of this consultation was scheduled to close 30th of June, but has been extended until 30th of September to give stakeholders time to consider the proposed current pandemic situation. My name is Aida Vatanya, I'm technical staff here at the ISB, and I'm joined today by my colleagues Il-Hong Park and Nick Farrow. Hi Il-Hong, hi Nick.
Hi. Hello.
Hello. So just as a reminder, we had 3 webinars already in recording. So these first 3 webinars are already available on our website. First webinar we had, I think it was back in February. It provided a general overview of the proposed exposure draft. The second started taking a detailed look at some of the proposals, which was the subtotals categories and the statement of profit. And in the third webinar, we discussed the details relating to disaggregation of information to financial statements. In today's webinar, we're going to discuss in more detail the board management measures. So before we start with today's topic, just a few housekeeping items. And I think we have the right slide up. We do. So just to note that the exposure draft and the company documents are available on ISB website, and the slides we are using today are also available for download, and you will have recording of this session available a few days after the session. And just to thank everyone for joining us today, and those of you who sent us their questions in advance. We also invite you to submit questions anytime during this webinar today, and to ask a question, you can just type it in text box and press submit, and we will answer as many questions as we can at the end of our presentation. And it's not just questions for us, we also invite you to answer questions we ask. So we'll have some polling questions, and we're going to run this poll at the end of the presentation. And just a final reminder that the views expressed today are those of the presenters, not necessarily of the board of the IFRS Foundation. So now I'm going to hand over to Il-Hong and Nick. Il-Hong, can you maybe start by giving us a bit of an overview of the project before we dig into the details?
Thank you, Ida. On slide 3, we have explained in previous webinars the objective of this project is to develop improvements in how information is communicated in the financial statement, with a focus on the information included in the statement of profit or loss. And moving to slide 4, the key proposals in the exposure draft address 3 main messages heard from investors through the agenda consultation and outreach during the exposure draft development. The first, demand for more comparability in the statement of profit or loss, was discussed in detail in our second webinar, exploring the requirements for defined subtotals in the statement of profit or loss. The second, concerning the quality of disaggregation in the financial statement, was discussed in depth in our previous webinar, covering disaggregation, including the disclosures of unusual income and expenses. And the third, which we will discuss in detail today, is about management-defined performance measures or non-GAAP information, which has resulted in the proposals for management performance measures. So Nick, perhaps a good place to start is exploring a little more about the current situation with non-GAAP information and the challenges investors told the board it poses for them.
Of course, thanks Il-Hong. So the message that the board heard from investors was that management-defined performance measures can be useful in their analysis because they provide insight into how management views their company's performance, how businesses are managed, and the persistence or sustainability of the financial performance. However, they also express concerns that the information currently provided is not transparent and can be difficult to find sometimes, and it sometimes changes from one period to another.
So what's the board proposing to address these concerns?
So given the usefulness of information that some non-GAAP measures can provide, the board thought it was important to bring transparency and discipline to the disclosure of these measures. It's therefore proposing to define a subset of these measures as management performance measures and to require the disclosure in the financial statements.
So you mentioned that the proposal is for only a subset of non-GAAP measures. Can you tell us why that is?
Sure. Feedback from users on this project led the board to focus it on the proposals for reporting of financial performance in the statement of performance and those related notes. So consistent with this scope, management performance measures are proposed to include subtotals of income and expenses.
So thank you, Nick. So let's move to slide 7. This slide gives an illustration of the types of measures that would be included and those that would be excluded based on a management performance measure being a subtotal of income and expenses. Could you explain a little more about what this means?
Sure. So management performance measures will be a combination of both income and expenses, so that those non-GAAP measures that are based on balance sheet or cash flow measures, individual items or ratios will not be included. So for example, something like free cash flow or return on equity ratio cannot be a management performance measure. Also, an adjusted revenue could not be a management performance measure because it's not a subtotal of income and expenses. Now, it could be an adjusting item within a measure such as adjusted profit, but on its own, it would not be a management performance measure. This limits the scope of the non-GAAP information that is provided today to a subset that is consistent with the focus of the project, that being the statement of profit or loss.
So we can also see here that IFRS specified numbers are excluded. Could you tell us about what these measures are and why they are not management performance measures?
So for these measures, there's a common understanding or a definition and related requirements within IFRS standards already. These are important to note because the proposed disclosure requirements for management performance measures do not apply to these measures, and they can also be used as subtotals that the management performance measures can be reconciled to. So the list of IFRS specified measures includes those that are required by this proposal, which we discussed in an earlier webinar, as well as subtotals similar to gross profit, which is those that are a difference between a type of revenue and a directly related expense incurred in generating that revenue. And it also includes a measure operating profit before depreciation and amortization, which the board's defined but's not required.
So we discussed this subtotal operating profit before depreciation and amortization in the webinar on subtotals and categories in the statement of profit or loss. But could you remind us why the board defined this subtotal?
Thank you. Yes, so as we discussed in the webinar on subtotals, the board had feedback that EBITDA was a widely used measure. However, there's a lot of diversity in how EBITDA is calculated, and the board decided not to require or define it. And that was mainly because it couldn't find a clear underpinning concept other than it being a useful starting point for various analyses. So without an alternative, this would have meant that all measures of EBITDA used to communicate to investors would have been management performance measures. However, the board concluded that a measure calculated as operating profit before depreciation and amortization would provide similar information to many of the EBITDA measures that we see today. Although this is not labeled EBITDA, it is a comparable measure that entities could provide and that would not be considered a management performance measure. EBITDA measures that entities may provide that are defined differently would still be considered management performance measures, but could be reconciled to operating profit before depreciation and amortization, providing greater transparency over what is included in that particular EBITDA measure.
So now that we better understand the subset of measures that can be included, let's have a look at the full definition of management performance measures. Let's move to slide 9. We can see here the definition includes those subtotals that are used in public communications outside of financial statements. Can you explain what this aims to achieve?
Definitely. So needing to be included in public communications outside financial statements provides a link to other communications that companies have with their investors about the company's financial performance. So it seeks to promote consistency between measures that are reported to users in the financial statements and those in other communications like the management commentary, press releases, or investor presentations.
Now, we've heard feedback that public communications could be interpreted quite widely. Does this mean it would capture every measure an entity used publicly? For example, measures it is required to disclose by regulation?
Well, to achieve the aim of consistency between what is reported in the financial statements and what is reported outside the financial statements, and to bring transparency to these measures, it's necessary to have a sufficiently wide definition to capture the broad range of different channels that companies use to communicate with investors. If the definition were too narrow, then there would be a risk that some of these measures that the board is aiming to capture would fall outside the scope of the definition, and therefore it would not achieve the intended goal. Another important part of the definition is that a management performance measure is one that communicates management's view of an aspect of performance. So this means that if a particular measure is required for regulatory purposes, it could meet the definition of a management performance measure, but it doesn't necessarily have to be one. So if in management's view the measure does not communicate an aspect of the entity's performance, then it would not meet the definition and would not be included as a management performance measure.
So you just mentioned that the definition includes management view. So the final part of the definition is that a management performance measure complements totals or subtotals specified in IFRS standards. Could you explain the significance of that part of the definition?
Well, one of the reasons the board proposes including management performance measures in the financial statements is that some non-GAAP measures can complement measures specified by IFRS standards. In practical terms, though, including this as part of the definition supports the requirements to reconcile management performance measures to the IFRS specified ones, and the disclosure requirement to make it clear that a management performance measure is management's view of performance and not necessarily comparable to measures with similar descriptions used by other entities.
And what if an entity only used IFRS specified measures in its public communications? Does that mean it wouldn't have any management performance measures?
That's right, and it's also a good point to highlight. Companies are not required to have a management performance measure. If they publicly communicate performance with investors outside the financial statements using only the IFRS specified measures, then they will not have management performance measures.
So once a performance measure meets the definition of a management performance measure, does that mean that there are no other restrictions on what a company can choose as a management performance measures? The board didn't preclude, for example, measures that are not compliant with IFRS?
Well, it's right to say that a measure that is not compliant with IFRS could be a management performance measure, but it's not quite right to say that there are no restrictions at all. So the board considered restricting management performance measures to those that are in compliance with IFRS, but decided that this might prevent measures that are useful, industry defined, or required for regulatory compliance. It would also have been in conflict with the objective of providing management's view of performance, and that's something that preparers and investors told the board was important. However, the board included requirements that a management performance measure must faithfully represent the aspect of financial performance that it purports to represent, and the management performance measure must be described in a clear and understandable manner that does not mislead users. It's then proposed a number of disclosure requirements to bring further transparency and discipline around these measures.
So including non-GAAP information in the IFRS financial statements is quite a new proposal. To help give some context to the disclosure requirements the board is proposing, could you tell us about some of the concerns the stakeholders had with this approach?
Of course. So given the wide range of management-defined measures outside of financial statements that are used in practice today, stakeholders had a number of concerns that the board needed to address with the disclosure requirements. Some stakeholders were concerned that management-defined measures could be incomplete or biased and therefore be misleading. Some were concerned that undue prominence or legitimacy could be given to such measures by including them in the financial statements. And some were concerned that without a defined framework, such measures might be difficult to audit.
So what are the proposed disclosure requirements that aim to address these concerns?
Well, there are a number of requirements, and some companies do today already in their financial reporting. And as we discussed, the board has not sought to limit the measures companies can use. Instead, the board concluded the best way to address the concerns of bias or completeness was to improve transparency over how the measures are calculated, why they are useful, and how they relate to the IFRS measures. So to achieve this, companies will be required to provide a description of each management performance measure, which explains why it communicates management's view of an aspect of its performance, why the measure provides useful information, and of course, how it is calculated. Importantly, the management performance measures will also be required to be reconciled to the most directly comparable IFRS specified total or subtotal. And as part of the reconciliation, the income tax effect and the effect on the non-controlling interest for each reconciling item would also be required. Now, to address concerns that management performance measures may give undue prominence or legitimacy, a clear statement is required to identify that the management performance measure provides management's view of an aspect of performance and is not necessarily comparable with measures sharing similar descriptions. Companies will be required to provide this information in a single note with all of the required information, and this means management performance measures are expected to continue to be non-GAAP measures. To improve the discipline of the disclosure of management performance measure, any changes to reporting measures would need to be explained, including reasons for the change, an explanation of what the change was, and a disclosure of the impact of that change.
So as you have mentioned, many companies are disclosing similar information today. However, one aspect that may be new for many is the disclosure of the tax and non-controlling interest effects on reconciling items between non-GAAP measures and IFRS specified measures. It might be useful to walk through an example of what this might look like.
Sure. If we move to the next slide, we have an example here of an entity that has one management performance measure, and that's adjusted operating profit. The adjusted operating profit is calculated here based on the operating profit as defined in the exposure draft, and then adjusted for two items. So that's restructuring expenses and a revenue adjustment. So this entity shows the reconciliation to operating profit being the closest measure. And as we can see on the right, the entity provides a table to show the effects of the tax and the non-controlling interest for each adjusting item.
And can you remind us why the board is proposing to require tax and non-controlling interest for each adjusting item?
Of course. So there's no restrictions on adjusting items in the exposure draft. However, investors might not always agree with the adjustments that entities make. And so such adjustments they may wish to add back into their analyses. By requiring companies to disclose the tax and the non-controlling interest effect for each reconciling item, those users that wish to analyze adjusted earnings on a per share basis will be able to better understand the individual impacts of the adjusting items and to revise a measure for these on a per share basis.
So we heard that it might be costly for preparers to disclose the tax and non-controlling interest effect on each reconciling item. Can you explain how the board has tried to address this concern?
Sure. So to alleviate the cost of preparing disclosures about the tax effect of the adjusting items, the board's proposing a simplified approach for calculating the income tax effect. That is, on the basis of a reasonable pro rata allocation of current and deferred tax of the entity in the tax jurisdiction concerned, or by another method that achieves a more appropriate allocation in the circumstances. Now, this method would provide users with a reasonable estimate of the income tax effect, making it clear when the tax effect of an adjustment is materially different to the effect that would be calculated applying the entity's effective tax rate. This is an approach similar to the approach for determining the income tax effect on items of other comprehensive income in IAS 12.
So in the illustrative examples accompanying the exposure draft, there is an example where unusual items and management performance measures are disclosed in one single note. Does that mean the board expects that many entities would adjust unusual items when calculating management performance measures, or that these two disclosures should be combined where possible?
No. So as we discussed in the webinar on disaggregation, there are separate disclosure requirements for each of unusual income and expenses and management performance measures. Disclosures related to unusual income and expenses are disclosed in one single note, and so are those related to management performance measures. If an entity adjusts all of its unusual income and expenses when calculating its management performance measures, it could combine the two note disclosures, provided that all the necessary information is provided in a clear and understandable way. Now, the board is aware that some entities are adjusting unusual income and expenses when calculating management performance measures, but it neither encourages nor discourages such adjustments.
Thank you, Nick. As you explained earlier, including non-GAAP information in the IFRS financial statements will be new, but users and preparers told us that many such measures provide useful information. To sum up what we've discussed today, could you talk through how the proposed disclosure requirements are expected to improve the situation from current practice today?
Absolutely. So we turn to the last slide. This summarizes the proposals, where the proposals aim to improve the transparency and the discipline over the non-GAAP information. So as we discussed in the definition, these benefits will of course only be the case for the subset of non-GAAP measures that meet the definition of the management performance measure. But for those measures that are included, users will be able to find all of the relevant disclosures in a single location, making them easier to find. There will be required explanations for management performance measures and reconciliations to the IFRS specified measures to give greater transparency. And in those jurisdictions with specific non-GAAP guidance, most of these will not be new. However, requirements for tax and NCI on reconciling items will probably be new for most. Bringing measures into the financial statements will bring them into the scope of audit, adding another layer of transparency. And finally, this package of disclosure requirements will be more consistent across all jurisdictions.
That brings us to the end of our formal presentation, but we would like to spend some time answering participants' questions. So Ida, can I turn it back to you to introduce the questions?
Thank you very much, Hong and Nick, for the presentation. And I think I am suffering from a little bit of a bad connection, so I might drop out, in which case Nick and Hong will finalize the session. But just to start, maybe before we start answering questions, I would like to ask our audience some questions. So what I will do is I'll push a survey out, which you should hopefully be able to see on your screens now. And if I can ask you to answer the few questions we have here on the survey. And as you're answering questions, I will have a look at the questions that have come in. So we have had some questions in advance, and so I will cover some of those first. So here is one maybe for you, Nick. The question was, is it right that ratios for IFRS specified subtotals cannot be management performance measures, and if so, why? Nick, do you want to cover this?
Sure. So yes, that's correct. That ratios would not be included in management performance measures, and that's based on the definition of them being the subtotals of income and expenses. And so, as we mentioned in the presentation, the reason that the board focused on that subset of measures was really to be consistent with the scope of the project being mainly the statement of profit and loss or the performance statement. But it also having other measures such as ratios, or we often get questions about other types of measures such as balance sheet. Those were excluded partly also because there would be a need to provide a different set of requirements and disclosure requirements around those measures, and that would have taken more time. And being outside the scope of the project, it was felt it was better to move forward with being focused on where this project is focused today.
Thank you very much, Nick. And we had a very similar question asking are all non-GAAP measures, management performance measures, and just explain why that is not the case. We have received one more question, and this is a comment we hear in relation to term and management performance measures. And the question is, are these measures actually measuring management performance? How management manages company? Is that really the objective? And Yvonne, do you want to take this one?
So your question is the management performance measures is the management performance. Is that right?
That's right, Yvonne. That's the question.
Okay. So management performance measures are measure of the company's performance in the view of management. They might be used for determining management compensation, for example, that their main purpose is to communicate management's view of performance to investors.
Thank you very much, Il-hong. I will cover a few more questions we received in advance before we move on to questions from today. And here's actually another one for you, Il-hong, that we receive often, and it's about whether management performance measures can be presented on the face of the statement of profit or loss. Il-hong, do you want to discuss that?
Thank you, Ida. The board expects that the few management performance measures will meet the requirements for presentation as subtotal in the statement of profit or loss. So in order to meet the requirements, subtotals must fit into the categories and also not disrupt the presentation of analysis of operating expenses by nature or by function. And finally, also should be comprised of amounts recognized and measures applying IFRS standards.
Thank you, Il-hong, and I think my connection is really not good. So what I will do now is I'll hand over to Nick to, finish going through the questions and discuss the survey together with Il-hong. And I just want to thank everyone for participating today. So over to you, Nick.
Great, thanks, Ida. So we have another question here, something that we've covered, but maybe just to remind everyone, Il-hong, are entities required to have MPMs?
The MPM is not required, but every company doesn't need to disclose management performance measures. So they have the alternative performance measure, but if the alternative performance doesn't meet the requirements of management performance measure, they don't need to disclose them. So not all alternative performance measures meet the definition of management performance measures.
Great, thank you, Il-hong. So that's right. If an entity, just to reiterate, if an entity does disclose all of its performance based on solely IFRS specified measures, it wouldn't be required to disclose a management performance measure, so it doesn't need to make one up. So we have another question here, which is probably quite pertinent in the current environment, and it speaks to would measures that are adjusted for the effects of COVID-19, such as what we've seen is EBITDA, be allowed as a management performance measure. Now, we appreciate this is a bit of a tricky one because we're sort of in brand new territory here. But we can say that we've seen that regulators are already suggesting that these types of measures might be misleading and should not be included in the alternative performance measures or the non-GAAP measures, depending on the jurisdictions. And as we discussed in the definition, if such a measure was not included in the non-GAAP or the APM type measures that are disclosed, it wouldn't meet that definition of a management performance measure. I'd also highlight that we talked about what are the requirements being us to have a faithful representation. And given many of the uncertainties that are out there, we think it would be quite difficult for a management performance measure to give a complete picture of all of the effects of COVID-19, particularly at this stage when there are many, many uncertainties still to be resolved. So we think that faithful representation criteria would be difficult to meet. So moving on to another question we have here, which is, let me just get organized here. So maybe this is one you can help with, Il-hong, and how frequently does a measure need to be included in public communications to be considered a management performance measure?
Management performance measures should be the performance measures the company with totals or subtotals specified by IFRS standards, and in management view communicate to users an effect of entity's financial performance. So the frequency or the method of communication, provided it is in public, shouldn't change these aspects of the definition.
Great, thank you, Hong. And looking through here, we have so here's another one, sorry, that we normally get. Why require companies to duplicate information that they already provide in the management commentary? And so maybe I'll go ahead and take this one. And just to explain that there isn't a objective of duplicating the information. As we explained in the summary of the benefits, one of the things that's trying to be achieved is to get a consistent set of disclosures across jurisdictions, because currently we know there are different requirements in different places. And so users don't get the same set of information necessarily. And they also find that even within a given jurisdiction, the disclosures can be in a different format to different levels of detail and in different places. And so the objective isn't to provide duplication, but to bring all of the information into a consistent place and to have a consistent set of information to be able to give users easy access to that information and a consistent set of information to be able to compare what management is reporting to how another might be reporting. And so that's maybe a good segue into the next question here, which maybe I'll ask you, Il-Hong, which is how do management performance requirements differ from existing non-GAAP requirements? So for example, alternative performance measures that ESMA has.
So the board disclosure requirements of management performance measures are very similar to the ESMA guidance on alternative performance measures. But the key difference is the scope and some disclosure requirements. So ESMA alternative performance measures include financial ratios and future forward-looking measures, but our proposals doesn't. ESMA doesn't require tax and NCI effect or a statement that alternative performance measures are not comparable across entities.
Thanks, Il-Hong. So we have another question here about prohibition of non-IFRS measures. So is there any prohibition on including non-IFRS measures in the financial statements? And if not, would they be in the definition of NPMs for those provided outside the financial statements? So as we discussed in the presentation, there is not a specific requirement excluding non-IFRS measures from the management performance measure. So when we say financial statements, we just need to be clear we're talking about the management performance note. And then again, provided that those criteria of being meeting the faithful representation and to be labeled in a way that's not misleading. And provided those are met, there is not a restriction, again, also as long as it's within the definition for a non-IFRS type measure to be included. Just looking through the other questions that we have here. So again, looking at the other jurisdictions non-GAAP guidance, one participant has asked us whether the US SEC guidance on non-GAAP measures has been taken into consideration. And so I can say that we, as a team and the board, considered all of the sort of the jurisdictional guidance that's out there in coming up with the guidance that we've proposed here, and we have been in consultation with many of the regulators, including in the U.S., in their development. Now they'll of course feed into this process and give us further feedback officially through the comment letter process. So we've tried to align as closely as possible where we can, and as we've said. What we've tried to do with these set of proposals is to get consistency between what's reported outside the financial statements and what's provided inside the financial statements. And so the measures, while they don't specifically address US SEC requirements, because of this need to be reported outside, will by necessity only include measures that have been reported already within the U.S. SEC jurisdiction for those that have reported there. Now, as I say, we'll still take into consideration further feedback that we receive on this from regulators included. And as I say, we've tried to align as much as possible the requirements here with those in many of the jurisdictions that have such requirements today. And so, following up on whether there are prohibitions on measures, I also have a question here about why that is the case, or why is the board not proposing any restrictions on the calculation of management performance measures. And again, this is one that we discussed in the presentation, but just to reiterate that the reason that the board decided not to impose specific restrictions, so to allow, for example, non-GAAP type measures within, non-IFRS measures within the management performance measures, was to not prevent entities from disclosing measures that users find useful. Also, to not prevent any specific industry-defined measures. We know there are a number out there that are not necessarily specified exactly with IFRS today, but are found very useful in particular industries. And there was a desire to not conflict with regulatory guidance that permits or requires some certain measures. So taking all of these into consideration, along with the fact that we didn't want to be in contrast with this objective of providing management's view, there's no specific restrictions other than the faithful representation and labeling that I mentioned. So I have another question here that's just come in actually regarding the EBITDA, or rather the operating profit before depreciation and amortization. And the question is whether if an entity presented the operating profit before depreciation measure, which as we discussed would not be an operation management performance measure, whether they would need to provide the tax and the NCI for that type of a measure. And that's in contrast to if an entity presented EBITDA, for example, would it need to present the tax and NCI for the adjusting measures. And this is one of the reasons that the board proposed the operating profit before depreciation and amortization as a measure, as an alternative for earnings before interest and tax, before depreciation and amortization. And that's because many of the EBITDA measures that we see today are actually adjusted EBITDA measures. When we look at just the financial statements and the pure operating profit, removing depreciation and amortization, as in the operating profit before depreciation and amortization measure defined, the only adjustments are depreciation and amortization. And it felt that the information about tax and non-controlling interest on information is not particularly useful for users. It doesn't provide information. It would be unlikely to try and provide a per share measure. And so that was one of the reasons that the board concluded it would be helpful to introduce this alternative subtotal that could be used and would not require the tax and the NCI disclosure. And then, as I mentioned, at the same time, in contrast to an EBITDA that did not use that, there would typically be other adjustments to the earnings component, and therefore it was felt that those would still be useful to require the tax and the NCI, and so they are still within the scope of the management performance measures, and those requirements continue. So looking through, I think that's the last of our questions. I think we will turn it then to see what you've had to say in the survey. And I will send the results now, so you should be able to see the survey results on your screens. And we can see that we have a good representation today from prepares the financial statements, almost 62%. And as always, some good representation from the accounting firms, and we have some regulators with us today. So on the question whether you agree with the proposals to include management performance measures as defined, half of you have said yes, so it's 9. A third have said no, management performance measures do not belong on the financial statements, and then we have a few that are not sure. So a slight majority, if you will, that agree, some that prefer to see outside the financial statements. So on the question of whether the board is proposing only subtotals for income and expenses to be management performance measures, again, we have about a third here, so about a third agree, about a third think the scope should be broader, and then we have a third that aren't sure. So on the question of whether the board proposes to define management performance measures using public communications outside of the financial statements, again, a little more than a third think this is clear and that no further guidance is needed, and then about another third say it is unclear and it needs further clarification on what is outside. And then a number of you believe that this is a broad definition and should be brought down. So I think this is consistent with feedback we've heard elsewhere that public communications is a quite broad definition and could use some additional guidance. On whether people agree with the board's proposal of specific restrictions, it seems the majority of you agree with how this has been proposed. And we have a few that think that this should only be with respect to IFRS standards. We've talked a little bit about why the board has decided the way that it has there. And then finally, in your view, what are the benefits of the board's proposals on the management's performance measures? And it looks like a large number of you believe that including all management performance measures and accompanying disclosures in a single note will make them easier to find. Quite a few also believe that including management performance measures in the statements is expected to bring them within the scope of audit, and that's something we've expected as well. The tax and NCI information for each adjustment is considered by about a third of you to provide good information. And then also a fair number think that all companies applying IFRS standards would be subject to the same requirements for management performance measures, that being in contrast to the variation in jurisdiction by jurisdiction today. So thank you for your feedback. As a reminder, we are considering the feedback at the moment in our outreach. Certainly, we know users have been quite supportive of the proposals, particularly for management performance measures, and as some of the surveys suggested here, some of the reasons being exactly as you've pointed out, that it brings those into a single place where they can find them and makes more consistency across the definition, across the jurisdictions, and gives a bit more transparency around the types of adjustments that are being calculated today. So with that, I just wanted to thank everybody for participating today. We had a good number of questions, and we're happy to answer those. And as I say, we are in the listening mode still. The comment letter deadline is the end of September, and so we look forward to hearing your further thoughts. With that, I think I will close the session and just thank you all for participating once again.